This tutorial compares technical analysis and fundamental analysis, the two methods which people use in order to invest in stocks on the stock exchange. Let's first look at technical analysis. Technical analysts believe that all information pertaining to a share is already reflected in the share price. They believe that they can pick out trends in the movement of the stock price and make buying and selling decisions based on these trends. So let's say a share of a certain company displays the following behavior over time. They'll notice that this share tends to rise, but then after a while it falls. And then when it rises again, it rises at a higher level than the previous increase, and then it falls. And again, true to form, it will rise to an even higher level next time. So technical analysts will note the trend in the movement of this share price, noting that it rises for a while and then it decreases after that, and then it continues to rise even further and decreases again, and this pattern is said to continue. So when the price is about to rise, they will buy and then they'll sell at some point in the future, hopefully just before it drops down again. And then when it rises again, they'll buy, and then when the price is increased and is about to fall, they'll try and sell. And they'll just continue doing this, hoping to make a profit between each buying and selling point. This is technical analysis. Technical analysis doesn't care much for the intrinsic value or the true value of the share. Don't care about the intrinsic value or the true value of the share. As long as they can keep on exploiting the patterns that they see in the behavior of the share price, then they'll continue doing so. So since technical analysis doesn't care about the true value of the share or the prospects of the company, many commentators say that it is not investing, it's merely speculating. So looking at making short-term gains without caring about the true fundamental aspects of this company or of this share. Now let's compare this with fundamental analysis. Fundamental analysts, on the other hand, will look at the true important features of a company and try and work out a value of that company based on the analysis of those features. So some of the fundamental things that they look at is the financial statements. They'll conduct some sort of financial statement analysis to understand what's going on with the performance and the position of the company. They'll also look at the management of the company. Who is the CEO in charge? What is their track record? They'll have a look at the industry as a whole and also the competitors in that particular industry. They'll look at any other news that reveal important information about the company. For example, a new product that's on the way out, or any sort of change in the strategic direction of the company. So having a look at all of these factors and more, they'll perform some sort of calculation in order to work out the intrinsic value or the true value of the share. If the intrinsic value of the share, let's say they work it out to be 50 Rand, is higher than the share price, say, of 40 Rand, then the fundamental analysts will buy that share. Conversely, if the intrinsic value, let's say again, is worked out to be 50 Rand, is lower than the prevailing share price, let's say that's 60 Rand, then the fundamental analysts will not buy this share. And if they currently own the share, they will sell this share. So their approach is more long-term in nature and is thus not speculative like with technical analysts. Their approach is what is actually meant when speaking about investing. So the key difference here is that technical analysts use graphs in order to depict patterns so that they can speculate on the movement of the share price. Fundamental analysts, on the other hand, look at all the key features of a business, work out the true value of the share, and use the true value in order to make an investing decision.